Hello everyone, this is Juan Sarmiento and today is Friday, July the 8th. Okay, I don't really have any new trades. You can tell by looking at the SPY that the volatility is falling, as you can see here. Or if you look at the, let's take a better look here. Let's expand this. Yeah, you can see that the volatility is still declining. Or you can look at the VIX. Same thing, declining. Okay, so we can wait a week or two before we enter new trades, and presumably you would start seeing good stocks jumping with earnings, and then we could play those. Okay, so what I'm going to do today is simply go through my current trades and see what I'm going to do. Okay, let's take a look at the chart and click on AXP. That will be my first. You can see that it's been coming down and now it's reversing and earnings are coming up. Okay, so that will be on the 22nd. So we have more than a week for that. Let's take a look at the trade, analyze AXP. Okay, now you see that I'm right there at the edge, so I don't mind sticking with this trade. Because let's say earnings, the stock jump with earnings, that's great. All you have to do is make sure that you have delta slightly positive, and it's slightly positive. Okay, if there is a big decline after earnings, you make good money. Let's go to the monitor tab, account statement, and look at AXP, and you can see that year to date I have made $105.55. The market value of my trade is only $1,000. So earnings or no earnings is no big deal. Okay, we are risking $1,000, and a big move in either direction could make us more than that. Let's just say, for argument's sake, that you see the P&L from the open. This is not real, but let's go to the monitor tab and say, check all my trades. You can see here from the first trade, and then a single sell of a call as the stock was going up, I presume, and then a roll down of a put. And then we have a rollover of the puts, of the 65 puts, and we have here, this is September, a roll down of a put. And now we hide the actual trade, the hide position, so that we see what the simulation is. Okay, so this has been a loser. Obviously, we have had previous trades this year on this particular stock, and let's say we say 250 days. We must have had other trades, because it says here that year to date we have $100. Yeah, we did have a previous trade that was successful, and this has been a loser so far. But let's see, it's about $1,000 loss. Yeah, $933. So let's assume, for argument's sake, that after earnings the stock drops to 127. You can adjust here just for a what if situation. Let's say it goes to 125. Okay, and with that big decline, the volatility spikes by 5%. Well, then it becomes more and more profitable, let's say 10%. And then it becomes, let's say 15. Then we have to go down, the volatility would have to go down up to 15%, and the stock price decline quite significantly for me to begin to make money. Okay, and that's why I would simply leave it there, because the trade itself is $1,000 risk. right here it says the market value. You can look at that and say, well, how much is worth that trade, and then you decide whether you want to keep it or close it and go. You know, perhaps you want to just close it and go. Okay, let's move on. Let's leave that then with the current July 29th. There's plenty of time for that, and then September the 6th. Who knows what is going to happen. The stock is trading at 125. This put is 135, so it's significantly lower than that. So we could even roll it down. Let's reset this. Reset slices. Yeah, because now we have to. He says that for the day, well, we need to reset these adjustments here. Reset parameters. There we go. For the day, I'm losing $17. Okay, so I'm essentially going to leave it as practically as a lottery ticket. If you think you want to rather keep that $1,000, then you can close the position. You can close it in parts because you have 5 legs here. Okay, let's move on to DG. Okay, now look at this. This is interesting because this stock has gone up since we entered the trade back here sometime. Let's see. The strike price was 230, so I can tell that I was somewhere here. 230. I was somewhere here when we entered the trade simply because of the strike price, and bingo, it went up significantly, and now the volatility is low here. And you can see that the current price is here, 253. Okay, you can see here that's my smiley face. The apex of the smiley face here is my signal that I could adjust. I could roll up the calls because it's right here. Okay, and do I believe the stock could continue to go? Yeah, it could break out and make a new high, but it could also form a double top, and that's bad news. It will go down, so we don't care either way. What we need to do is, because it's gone above the smiley face, that means we have made money on the call side, and it's time to do a roll up. We have one outstanding long call, and so what I mean by that is that we have 2 long calls minus 1 short call. That makes 1. 2 minus 1, 1 outstanding call. And then I'm going to roll that up. Analyze rolling. And what do I mean to do? Well, first of all, it's only 1. We're going to sell the 230 and buy at 255 if they're available. Make sure that you have them both at the same expiration date, and we don't have the 255, so we'd have to go to the 250, and doing that leaves me a delta of 10, or we could go to 260, and that leaves me a negative delta. I'd rather have the positive delta, because the stock going down, the volatility will help me. The stock going up, only delta will help me. So there it goes, 1405 credit. I'm gonna get that much. 14.05 times 100 is $1,485 in credit, and that reduces my position by that much. If you want to see that, look at it here. DG, it says that I have a position of $4,422.50. If that trade fails, it will be reduced by that much, by 1,400. So it will be like 3,000 then. Let's see, account. It will go down to 3,000. So it reduces my exposure, right? So I'm taking profits and making sure that I don't lose too much money by reducing my market value. Okay, let's go back to the analyze. So July 9th is my shorts. Those are fine. We will deal with that when we're closer to the 29th of July. let's go to UPS. This is the current rate, $209.93. Okay, let's hide that. So we know we're profitable here. I don't need to do anything. It's not above my smiley face. It's right in the area of my cone here. I don't need to do anything really. We would have to deal with it as we get closer to expiration. Volatility is really high right now, but that could even go higher. I don't know. All right, that's all for today. I think we could have closed this position because we have a little profit, and the volatility doesn't really show the volatility here. Yes, here, 33, 33, 42. So the volatility of the back month is really, of the front month is really high compared to the back month. Okay, let me see, look at the chart. Yeah, we hold until the next month, and then we could close it as we approach earnings. Okay, so for the time being we just stay put. We haven't made much money lately, but overall for the year is nearly $12,000. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye bye.